Here's something that might surprise you. While the world watches high-stakes diplomatic meetings that could reshape global security, gold markets are sitting remarkably calm. But that calm might be deceiving. Precious metal investors found themselves in a holding pattern this Monday as they carefully evaluated the implications of a critical face-to-face meeting between U.S. President Donald Trump and Ukrainian President Volodymyr Zelensky. Alongside the anticipation building around the Federal Reserve's upcoming Jackson Hole symposium, the yellow metal showed minimal movement, with spot gold trading at $3,333.32 per ounce as of 1:42 p.m. Eastern Time, 17:42 GMT, representing a slight decline from earlier levels. Interestingly, gold had touched its weakest point since the beginning of August during the trading session, suggesting that even traditional safe haven assets aren't immune to current market uncertainties. But here's where it gets controversial. Trump's declaration that America would help out European nations in ensuring Ukraine's security as part of any potential peace agreement raises fundamental questions about the future of U.S. foreign policy and military commitments. This hastily organized White House meeting between Trump and Zelensky was designed to explore viable pathways toward ending Russia's ongoing conflict with Ukraine. The European leadership delegation was scheduled to convene with Trump in the White House's East Room at 3 p.m. Eastern Daylight Time, 1900 GMT, according to official White House communications. This gathering follows Trump's previous meeting with Vladimir Putin on Friday, where both leaders expressed their intention to pursue a peace agreement without implementing an immediate ceasefire, a decision that many foreign policy experts view as either pragmatic or dangerously naive. For those new to understanding how geopolitical events affect precious metals, here's the key connection. Gold traditionally serves as a hedge against uncertainty and currency devaluation. When major world events create instability, investors typically flock to gold as a store of value. U.S. gold futures contracts for December delivery concluded the session with a 0.1% decrease, settling at $3,378. Meanwhile, the U.S. dollar strengthened by 0.3%, which creates a natural headwind for gold prices, since the precious metal is priced in dollars globally. When the dollar rises, gold becomes more expensive for international buyers, typically reducing demand. Edward Meir, a seasoned analyst at Merrick's, offered his perspective on the market's reaction. There was not much reaction in gold to the Putin-Trump meeting. I think we'll continue in this price range. The next inflection point is the Federal Reserve Conference. His observation highlights how markets sometimes react more to monetary policy than geopolitical events. And this is the part most people miss. The Federal Reserve's upcoming decisions could have far greater impact on gold prices than any diplomatic breakthrough. The central bank's July policy meeting minutes are scheduled for release on Wednesday, creating anticipation before the Fed's annual conference in Jackson Hole, Wyoming, running from August 21st to 23rd. Federal Reserve Chairman Jerome Powell is expected to deliver remarks that could significantly influence market direction. Investors are particularly focused on Powell's commentary regarding the economic outlook and future monetary policy decisions. While financial markets have already incorporated expectations for a 25 basis point interest rate reduction, there remains an outside possibility of a more aggressive 50 basis point cut. According to Mayer's analysis, such a scenario could provide substantial upward momentum for gold prices. For beginners wondering why interest rates matter so much to gold, lower interest rates reduce the opportunity cost of holding non-yielding assets like precious metals. When you can earn less money from bonds and savings accounts, gold becomes more attractive as an investment alternative. Additionally, gold historically performs well during periods of low interest rates and elevated uncertainty. Looking at the broader precious metals landscape, spot silver managed a modest 0.1% gain, reaching $38.02 per ounce, while platinum experienced a slight decline of 0.1% to $1,334.10. spot palladium demonstrated more significant movement, advancing 1% to $1,122.86 after recovering from its lowest level since July 10th, earlier in the trading session. But here's what really makes this situation intriguing. Are we witnessing a fundamental shift in how markets respond to geopolitical tensions, or is this apparent calm simply the eye of a larger storm? The traditional relationship between global uncertainty and precious metal demand might be evolving as investors increasingly focus on monetary policy over geopolitical risks. This raises some thought-provoking questions that deserve serious consideration. Is the market's muted response to major diplomatic developments a sign of investor fatigue, or does it reflect genuine confidence in peaceful resolutions? Could the Federal Reserve's monetary policy decisions now carry more weight in precious metals markets than international conflicts? What's your take on this shifting dynamic? Do you believe gold still serves as the ultimate safe haven asset, or are other factors now driving precious metals markets more powerfully? The intersection of diplomacy and monetary policy creates a fascinating case study that challenges conventional wisdom about market behavior.